Hey everyone, it's Hamish from the Young Investors Podcast. Myself and Brandon are excited to bring you your weekly rundown of the latest business and investing news from around the world. A quick reminder before we get started, any advice provided by Brandon is general and does not consider your financial situation, needs, or objectives, so consider whether it's appropriate for you. Brandon van der Kolk is authorised to provide general financial product advice in Australia and is authorised representative number 1305795 of Guideway Financial Services Proprietary Limited, AFSL number 420367. Please see the description box for Brandon's financial services guide. Past performance is not a reliable indication of future investment returns. But with that said, let's get into another episode of the Young Investors Podcast.
All right, guys, welcome back to yet another episode. Happy New Year, Hamish. Welcome back to the podcast.
Happy New Year.
Yeah, Happy New Year. Sorry to drag you out of your holiday mode, but the people are waiting. The people are waiting.
Yeah, we're back. No, it's actually funny. I didn't realize. I knew I was going to take some time off, but I now in hindsight realize I took quite a long break because I think it's been about a month now. I think it's like 30-something days, 31 days since I posted. Yeah. So it actually has been a long break, but it's good. It's been good.
I went back to my parents' house in Canberra, and I left in mid-December. And I'm now only getting back. So I came back here to Melbourne, to this place, and I was like, wow, what the heck? I haven't been here in so long. It's been like a month. But annoyingly, Hamish, yesterday I was packing up my things in Canberra, and I came back yesterday. I dropped my camera, which is extremely annoying, and that's why you are seeing me on a Google Meet call, not on my beautiful camera. But I thought I'd gotten lucky because it looks like it's our cameras. They look like they're not too expensive, but they kind of are pretty expensive. And I dropped it and I heard a crack and I was like, oh no. But I could turn it on and I could look through the viewfinder and everything still seemed to work. And then on closer inspection, the sensor is like kind of floating around in the housing a little bit. And also my camera can't focus anymore. Oh. So
yeah, it's kind of an important component.
Yeah.
Wait, so it's the actual camera itself. So it's not even just the lens that's broken. It's the actual camera.
I think so. I dropped it and it hit the bottom of the camera housing. And right. I don't know, to be honest, you probably prefer to sacrifice the camera itself as opposed to the lens. The lens is usually the the more expensive piece. But yeah, I think there are problems with both. There's some like visible like damage to the lens, but I don't actually know what the problem with the focus is. Is it something to do with that? Like obviously the lens focuses, but it looks like the lens is actually working. I just don't know if maybe the sensor's a bit messed up now. But anyway, very annoying because now I'm going to have to get a fix sorted out quick smart because I don't have a second camera because that camera was bloody expensive.
Yeah, true. Yeah. Are you going to get it repaired or are you just going to buy a new one?
Well, I think I'm going to do both because I think it's smart to have two cameras, especially for I've got something potentially exciting coming up in the next few months, which I'm going to need two cameras for. So I think I may as well just buy a second camera and then get this one repaired. Yeah. I think that's just the way I'm going to have to do it. But yes, just so annoying, man. So annoying. My holiday was going so well. I was like, actually life was going too well for me, I can tell you. It was like something had to come along just to balance it out.
Yeah. You had to have something that happened. Everything was a little bit too smooth. Yeah. You probably dropped it on purpose just to balance things out.
Just to balance it. No, I was walking back to the car and I was like, you know what? Life's good at the moment. And I flung my bag over my shoulder and my camera just went shunk straight out.
Yeah.
Anyway,
Damn.
What you been up to? How's your break?
Pretty good. Fairly uneventful. Yeah. I mean, even on New Year's Eve, I had a little party just before New Year's Eve, but on New Year's Eve, I didn't even do anything. I was just,
oh, really?
Yeah, I had a very quiet New Year's Eve. So,
so did I this time around. Yeah.
Yeah, which is unusual. Usually I'm doing something pretty significant. Yeah. But it's been good. It's good to start the year, I think. I don't know, without waking up with a massive hangover on New Year's Day.
Yeah, you know, I thought the exact same thing. Not to get too far, drifting too far from our investing podcast, but I just watched a TV show. I watched Jury Duty. on New Year's Eve, and I didn't even drink. I woke up on the 1st of January. It's the first of January I've had in a long time where I woke up and I was just like, oh, I'm normal. I guess this is what the 1st of January feels like.
No, it's good. Yeah, I'm excited to get back into it. What have we got today? We've got. I'm going to talk about. We've got an update out of the Fed. We've got the minutes from the December meeting, and there's some interesting commentary there around what the Fed is expecting with inflation and interest rates going on into 2025. I'm also going to talk about Disney's ad-supported streaming tiers, which they provided some interesting data on how that's been kind of performing. It's been kind of a new thing. A lot of streaming services have been introducing. And what have you got for us?
I'm just going to talk about the debt ceiling because it's back. It's back, baby. And also, I got a little bit on Ubisoft as well because I think they're looking to sell out, which is kind of interesting. Ooh. So I'll talk about that at the end of the podcast. Yeah.
Interesting. Well, with that said, today's episode is brought to you by Seeking Alpha, your one-stop shop for stock analysis, market data, and news. Access expert analysis and news for thousands of stocks. View buy, hold, and sell ratings from members, Wall Street analysts, and Seeking Alpha's own algorithm. Screen for stocks using a variety of fundamental and technical analysis metrics. Access 10 years of financial data and company filings, and manage your portfolio by tracking your investments with price alerts, so you never miss a buying opportunity again. Click the link in the episode description or head directly to seekingalpha.me/young investors to try Seeking Alpha free for 7 days.
All right, man. Well, talk to me about this. Talk about what's going on with the Fed. Because to be honest, over Christmas, it was really nice, Christmas and New Year's, because I did not look at any news whatsoever. Like, I have no clue what's going on in the finance world right now. So this podcast is going to be a good kind of catching up, getting back into the swing of things, because I have no idea what's going on with the Fed right now. Absolutely zero.
Yeah, I did the exact same thing. I took, the last couple of weeks, besides, I've been back at it this week because I've been putting together a video and we're doing the podcast and stuff. But before this week, I had no idea what was going on. I had to really to dive into some stuff to see what's been happening in the world. But yeah, the news this week is that we got the minutes, we got the kind of the notes and extra details out of the December Federal Reserve meeting where they decided to cut rates for the third time in 2024, I believe, right? They did cut for 25 basis points. A total of 1% was cut throughout 2024. Now we kind of get some details out of the meeting. So the Fed thinks that inflation will continue to slow over the coming years. However, they said, and this is a quote, the process could take longer than previously anticipated. And so just to put that in context with their actual projections, PCE inflation in 2024 was 2.4%. The Fed projects this will actually rise to 2.5% in 2025. So they think over the next year, inflation isn't going to really get any better. In fact, it's going to get kind of slightly, modestly worse, before then slowing to 2.1% in 2026. So that's their kind of current projection. And that was a slight change from the projection they made in September, where they had inflation continuing to fall in 2025. And so the question is, why are they now kind of expecting an increase or inflation to be maintained throughout 2025? What's really changed between September and December? And it's really all around Trump's potential economic policies now that he's been elected. And so in the minutes, they indicated that new tariffs, other changes to trade and immigration policy could bring higher than expected inflation. And
makes sense.
It makes sense, right? I think we've spoken about this a little bit in podcasts here and there. The general kind of economic theory is that if there are tariffs put in place, and if they're going to spend a bunch of money on kind of this massive immigration strategy, that's generally going to be an inflationary, stimulative kind of action.
Yeah. spending money equals inflationary.
Yeah.
Pretty much.
Yeah.
It's so interesting,
who
man. It's kind of we're like a week. Sorry, this is a bit of a tangent, but we're like a week late for our predictions because we have so many more like juicy Trump things now with all this crap coming out about him trying to like buy out Canada and Greenland and Mexico and stuff like that. Like, have you been following? That's the one bit of news that I have heard about. Have you heard about that? Just totally tangential here.
He hasn't even gone into office yet, and it's already so good. the content is already so good, which is.
And have you seen like the remarks from like the leaders of Denmark, who controls Greenland, and Trudeau for Canada and Mexico? They're all just like, there is no way in hell that we are letting that guy take over our country.
Yeah, it was quite bizarre to see that. Yeah, I don't know if I have any like deep thoughts on that, except that I just kind of laughed at it. But
just such a meme.
Yeah, but it's great. It's great content. As I always say, sitting here in Australia, far away from the rest of the world, we're just watching the reality TV show that is the United States. But
yeah, the good thing is that I don't think Trump is going to have any interest in buying Australia.
No.
That's kind of the good thing about being so flippin' far away from everybody else is that they're just like, we're just like this patch of land just sitting in the Pacific Ocean somewhere.
Yeah.
Everyone's just like, well, do we want to, most of it's desert, you know, is there much going on? They got some minerals, but it's just so far away that it wouldn't really help. Yeah, we'll just leave them alone. They can do whatever they want.
It's a good place to be. They also said in the minutes that committee members also suggested that rate cuts may be done for now. This is a quote. Participants indicated the committee was at or near the point at which it would be appropriate to slow the pace of policy easing. So after 3 kind of rate cuts, a total of 1% in 2024, potentially that actually might be it for now, or maybe there's like one more cut, and again we can put that in context with the specific projections that the Fed provided for what they think will happen with interest rates throughout 2025. So the current range for the federal funds rate is 4.25 to 4.5%. There are 19 participants who kind of vote on where they think the policy should be at the end of, or where the rate should be at the end of 2025. Of those 19 participants, 10 think that there should be 2 25 basis point cuts in 2025. So most or more than half of the participants think that there should be interest rates should be cut by 0.5% in 2025. 3 members think that there should be 3 cuts. 3 members think there should be 1 cut. And then there was a couple of members who were at either end of the extreme. One thought there would be like 5 cuts or something like that. And so
15 cuts.
We're straight back down to 0. Let's do it again.
I'm an advocate for negative interest rate policy, actually.
Yeah, exactly. But in essence, the majority, or the kind of the consensus, or I guess maybe not a consensus, but the average of the committee members is 2 rate cuts now for 2025, and that's actually down from 4 rate cuts, which was the projection in September. And that's actually why you might have noticed that the stock market went from basically just beelining up straight for a very long time to becoming a little bit more volatile in the last couple of weeks, because now there's been this kind of introduced uncertainty around how many rate cuts will happen over the next year or so, which for financial institutions and a lot of the market, they care a lot about that. As a value investor, you probably shouldn't care too much about that, but the market certainly does, and that's the explanation for why we're seeing it.
I feel like we're just going to see what Howard Marks was predicting all along, like how he talks about interest rates were at 0 for a good couple of decades pretty much, but that was a very stimulative kind of rate that we kind of got used to. Now we had the inflation, so interest rates went up super high, and now that inflation's coming back down and is basically back down to kind of 2 to 3%. No, we're not going to go back to 0%, but we're just going to stick it somewhere around a neutral kind of interest rate, 3%, 4%. Doesn't have to be restrictive, 5, 6, 7, 8%, so on. But yeah, I've always said, so many people just think we're at zero. So after inflation is done, we're going back to zero. I just do not believe that's the case at all. Like I just don't think there's any reason why the Federal Reserve would want to do that. So yeah, I to be honest, this kind of makes sense. Like, sure, there might be some people think, oh, there's going to be 2, there's going to be 3 cuts, there's going to be 1 cut, there's going to be 4 cuts. But I think generally speaking, it all kind of says the same stuff, that we're probably going to end up with an interest rate somewhere in like the 3s, 3 to 4, which is pretty neutral.
Yeah. And that just makes sense. Like, if like a 10-year government bond is at 4%, let's say, which is like kind of 1 rate cut from here, or 1 or 2 rate cuts from here, and inflation is 2.5%, 2%, which is where it's been. That's what you would expect from a risk-free long-term investment, that you make maybe just above inflation, or right around what long-term inflation is. But certainly you wouldn't expect there to be 2.5% inflation and the bond is at like 1% or something like that. That just doesn't make any sense for long term. So I agree. I think you're right.
Yeah. There you go. All right. Is that all for you? Got more to add on Fed minutes?
No, that's it. What have you got?
Nice. Well, I am going to talk. I'm making a video on this at the moment, but I'll talk about it here anyway because I think it's quite interesting. You remember that concept called the debt ceiling, Hamish? You might have forgotten it because Congress decided to forget about it for a while. But now they can't forget about it anymore because it's back.
They kicked the can and now we're back at the can.
Yeah, now we've caught up to the can. Exactly right. So the debt ceiling, this concept that the government has a limit to which they can borrow to pay their obligations. And if they want to increase the limit of borrowing to pay their obligations, they have to run that increase through Congress. So there's kind of like a check. It has to be ticked off by Congress before. It kind of just stops the government just going crazy and just borrowing a just unlimited amount of money. Anyway, over the last, long time, it's just become a political kind of game of chicken. It gets used as a bargaining tool, which I don't think is very good. I actually think my like crazy idea is that when it comes to debating the debt ceiling, there should be a rule that says when Congress talk about it, they can only talk about the debt ceiling. They can't bundle it together with other stuff. I think that would be quite a good rule. Like when they're talking about debt ceiling increases, they can only talk about the debt ceiling. They can't like bundle it with spending cuts and crap like that. I think that would be quite a good rule to stop all this like pushing it to the 11th hour before they approve these increases. But anyway, that's a tangent.
Well, I agree. The funny thing is though, that rule, trying to put that rule in will be bundled with something else. Like that's the new bargaining chip.
Yeah. True. That's funny. That's a good point though. Anyway, so there's this debt ceiling. Middle of last year, you probably remember there was a lot of back and forthing between Democrats and Republicans. They were getting all antsy at each other. Republicans wanted there to be major spending cuts attached to the increase in the debt ceiling. Anyway, it was kind of like a stalemate in the end, because what they decided is they just suspend it for a time. We'll come back and we'll deal with it later. And they did. They suspended it until the 1st of January 2025. So how's that for a nice Happy New Year, everybody? Here's some financial stress.
Happy New Year.
Yeah, deal with this. Interestingly, at the time they suspended the debt ceiling, Hamish, the national debt was 31.4 trillion. And this was in June, right? June last year, not that long ago. As of December 31st, the debt was 36.1 trillion. So that's 15% higher in 6 months. How crazy is that?
That's not a problem. I can't see anything that could go wrong with that.
No, definitely not.
No, nothing
so
to see
I thought that was kind of crazy. They've really taken the opportunity to expand the debt. No. But yeah, it's now that it gets reinstated, so the debt ceiling gets reinstated at the current level was at the end of the 31st of December of last year. So it gets reinstated at what did I say? 36.1 trillion. However, that means that it's already like it's suddenly a pressing issue again, and they've got to do something about it. So this year, you're probably going to see a lot more chatter about the debt ceiling because it is now a problem again. In fact, Janet Yellen wrote in a letter that, quote, Treasury currently expects to reach the new limit between January 14 and January 23, at which time it will be necessary for Treasury to start taking extraordinary measures to avoid a default.
Yeah,
that's fine. It's fine. And interestingly, it's not. I know that we had the election; it was Republican clean sweep, but people are still saying it's going to be quite hard to get these increases through. For example, Fitch believes it'll be tough to get an increase due to a narrow Republican House majority, and it kind of makes sense. So I should say Trump has also come out and tooted his horn about what he wants to do with the debt ceiling. He's actually in favor of abolishing the debt ceiling, saying that he actually said this, getting rid of is the, quote, smartest thing Congress could do, and that he would, quote, support that entirely. But what's interesting is that this obviously contrasts with a lot of the kind of hardline fiscal conservatives, the hardline kind of Republicans in his own party, who are reasonably reluctant to increase it without these big spending cuts. That's kind of what they were arguing last time. So I don't know. Like, I've got no idea US politics. We'll see how it plays out. But it seems like it could actually be a bit of an issue, and it might be hard for them to get these increases through as easily as what the election kind of played it up to be.
Yeah. Well, I mean, the debt ceiling's kind of pointless. I mean, they like you said, it's just a political it's like a political chip that's kind of used every single year, or in this case, every 6 months. It's not like it's an actual ceiling, and most countries I don't think even have a ceiling, to be honest. But yeah, it'll be interesting to see kind of because we don't have a ceiling in Australia, I'm pretty sure.
No.
No. But yeah, the US certainly has quite a spending problem, I would say. So it is going to be interesting to see how that how that works with as you said, a lot of like kind of the very conservative part of the Republican Party is in favor of reducing spending in a meaningful way. So abolishing the ceiling might seem like kind of a counterintuitive to those kinds of people.
Yeah. So yeah, I was going to talk to you about it. That's pretty much the news. There are a couple of arguments for it, obviously. I ChatGPT'd it a little bit earlier. It says it forces lawmakers to periodically reassess the country's borrowing and spending habits, acting as a check on government overreach. I mean, that makes sense. It draws public attention to national debt levels, meaning greater public awareness of fiscal issues among citizens and policymakers. That makes sense. It keeps the discussion. It protects against catastrophic hyperinflation or a global financial crisis because the government can't just borrow insane amounts of money. So they can't just financially cripple the country. There's like a safeguard there to make sure that Congress has to come and revisit it. But yeah, then on the downside, you get this, it causes this brinkmanship where they just push it. It's like a bargaining chip, which is, I mean, you're right. It's kind of pointless, and you kind of basically said exactly what Donald Trump said about it as well. It's like, who even knows, like, it could be catastrophic or it could be completely meaningless. Like, but I just, what I don't like the fact that obviously the US starting to default on some of its debts would have very big consequences. It would disrupt financial markets around the world. And I just don't like the idea that consequence can just be chucked around as such a bargaining tool. I just wish so I'm kind of caught on the fence a little bit. Like, would I be in favor of just getting rid of it so that you can't have this brinkmanship, this like jousting and this bargaining between politicians, which is just kind of nerve-wracking? Or do you keep it because it still has a role in making sure the government doesn't go crazy? But I don't know, like, what way do you lean? It sounds like you lean more on it's probably just easier if you just get rid of it. And there would be advantages of that as well.
Yeah, it's kind of one of those things, I think, where in principle I certainly agree with it, but in practice, in the way that it is kind of used, it doesn't really line up with the reason you would have it in the first place, I think. Which happens. You know, you have things that in principle it sounds good, or in principle something seems like it would work really well, but when it's implemented with humans, it's used in a way that maybe wasn't expected, or maybe was expected, but it just can't be. Yeah, it just doesn't work that way. So yeah, I don't know. It's hard to say. I'm not sure. Honestly, I don't really know.
Yeah, I think there are arguments on both sides, but yeah, I hate the fact that it's just this political game of chicken. It's like toying with such severe financial consequence. Like, I know realistically they're not going to let the US default. That would have to be stupid to actually let it happen. But I hate the fact that they use it as a bargaining chip. That just makes me annoyed. But anyway, yeah. So there you go, Hamish. There's actually not too much news in that story, apart from the fact that the debt ceiling is now back in place, and Congress will once again start deliberating again. So I'm looking forward to that. Not.
Very exciting.
Anyway, talk to me about Disney.
Yeah,
I tell you what, if we're going to talk about ad-supported streaming tiers, I hate them, Hamish. I flippin' hate them so much.
Yeah.
It's so annoying because now they're all doing it, and I pay for these streaming services, but I don't pay enough, so they still show me ads. It is infuriating.
Yeah, I'm not a huge fan. I mean, it's good in a sense for, I guess, people who just don't want to pay, like, for the premium amount or whatever. You just want to pay a few dollars and then get some ads. But I can't stand watching things with ads, which is kind of ironic given I'm a YouTuber. But yeah, I'm not a, yeah, if I could pay my way out of ads, I will.
Yeah.
But Disney's ad-supported tier has been doing really, really well, and they provided some interesting kind of stats in regards to it, which I took a look at, and I thought was rather interesting, given that a number of streaming services, media companies have kind of jumped on board with this idea of adding an ad-supported tier to their kind of premium streaming model. And so on Wednesday, Disney said it has an estimated 157 million global monthly active users watching ad-supported content across its platform. 157 million.
Wow.
Monthly active users. And that's across Disney Plus, Hulu, and ESPN Plus. So that's across all of their streaming services that have an ad-supported tier. But 157 million global monthly active users, including, get this, 112 million US users, just American users.
Wow. That's huge.
Which is crazy. And as I will kind of get into, the numbers a little bit, they kind of fudged the number a little bit, which is why I wanted to talk about it. And I thought was interesting. But yeah, certainly that's quite a stat that they've been able to provide. 157 million.
Put that in your investor presentation.
Well, they did. That's exactly what they did. And so, yeah, so you know, media companies have been particularly focused on generating profits from their streaming businesses recently. So they kind of went through that period where they were just spending heaps and trying to grow their sub base. Now they're trying to generate profits, and one of the ways they're doing that is through advertising. And so, interestingly, one of Disney's services, Hulu, was the first to offer an ad-supported option. That Hulu's had an ad-supported option for a very, very long time. And then every other service kind of just had these premium options. And it's only recently that we've seen Netflix, Max, and now Disney Plus, Amazon Prime also put ads into their kind of base service. And so it's only recently that we've seen this kind of ad market develop, which, yeah, as I said, as you said, you know, we're maybe not a huge fan of it, but it kind of makes sense. It's kind of surprising that tier didn't exist, given there's already this massive, television advertising infrastructure that already exists, and it's very natural for that to kind of move into the streaming space. it's basically a 1-to-1. If companies are advertising on network, on a network, to run those ads in front of a streaming audience. So it makes sense, and it's surprising that it took.
I'll still complain about it, Hamish. Just let me complain.
You can complain all
I
you
know
want.
it makes sense. You're loving it. You're every time you get served an ad on Netflix, you're like, oh, this helps my investment. You're loving it.
Yeah.
You can't wait for the ads on Netflix. You're like, more. Give me more.
Oh, dear. Disney CEO Bob Iger said the company is trying to steer its customers towards ad-supported tiers. The company has raised its prices on commercial-free options since launching Disney Plus with ads in late 2022. So not only have they launched this ad-supported tier, they're specifically trying to push people towards it. And so Disney and some of these other businesses, Netflix has kind of said a similar thing, I believe. They seem to think that the combination of a monthly subscription plus ads can make, in the long run, more money than just a premium subscription. So they've actually been kind of pushing people towards it. And so, yeah, as I said, 157 million users, monthly active users is what they said. Sounds huge. And to put that in context, Disney Plus Core, Hulu, and ESPN Plus have a total of 200 million subscribers. And so you put the number that they've just come out with, 157 million users, kind of makes it sound like everyone's on the ad-supported tier. But it's not exactly kind of the way that it works. In fact, it's not how it works at all. And so Disney essentially came up with their own methodology for calculating monthly active users, which is distinctly different from the number of subscribed accounts. And so firstly, the account, these are kind of some of the rules that would count someone as a monthly active user. Firstly, the account would have to have viewed ad-supported shows for at least 10 seconds during the month. So as long as you watched one show for 10 seconds, you were counted as a user. But then Disney multiplies the account by an estimated number of users. So if a household has one account, Disney will then just guess essentially how many people are actually using the account. Which, that's not super crazy because you can imagine if one account has like 3 like profiles, they can probably work out, okay, maybe there's like 3 different people in the household, although it's certainly not foolproof. But
ask Bob Iger, and he's like, we actually find it's quite common for a mum and dad to sit down with their 27 children to watch a TV show.
yeah, exactly. So what are you multiplying it by? 15? That's how many people live in each house, right? It's about that.
I think so.
Yeah. But that's not even the crazy part. The bit that makes this number kind of useless is, let's say I'm a user of Disney Plus, Hulu, and ESPN Plus, and I watch a show on each of them during the month. I won't be counted as one user. I'll be counted as 3.
You're 3 people now.
Yeah. And so, I mean, the number is kind of meaningless in a way because we don't really, like, it sounds good, but, like, I feel like you need a bit more context to understand, like, what does that actually mean? Because, if you're counting me as 3 people, that's clearly not, very accurate.
So the number of users is between 1 and 157 million.
Correct. Yeah.
On ad-supported. Okay, so somewhere in that range. So at least that narrows it down a little bit.
Yeah. There are some people, I believe, who are monthly active users of ad-supported content on Disney streaming services. There's some. Yeah. That doesn't sound as good though as 157 million. So.
Yeah. Exactly.
Disney.
That's so funny making up the number though. That is a bit of a fudge. Like, how is that reliable in any way, shape, or form?
Yeah, like I said, it's kind of meaningless. So you
just can't use it. You can't really rely on it.
No, and Disney doesn't say how many subscriptions they have for each of the tiers. So we have absolutely no idea how many of the 200 million subscriptions they have across their platforms, across their services. We have no idea how many are on like the ad-supported tier. which you would
Yeah,
think
we do. It's between 1 and 200 million, dude.
True, that's right. That's right. Sorry, I forgot. Come
on, lock
amount.
in, mate.
Which I do find kind of ironic in a way, because they made this post, they made this news release saying like, oh, we want transparency with like the ad supported tier and stuff. But they could literally just say how many accounts they have. the one actual number that could be like maybe used in some comparison or something, they just won't provide it, but they'll happily make up some number.
Yeah.
Which I thought was kind of funny, because the whole post was like, yeah, we want transparency in the media space and all this. But they did say one thing, which was they said that more than half of new US Disney Plus subscribers were choosing the ad tier. So of the new people who are kind of subscribing, it is quite popular. So yeah, they're giving us just the right amount of transparency for that satisfies them.
There you go.
And so, yeah, I mean, we kind of touched on this already, but it is interesting to me to hear kind of more details about the different strategies that that streaming services are using. But, you know, as I kind of alluded to, the big problem is none of these metrics are standardized. Like this monthly active users figure is essentially an estimate. And even if you took total subscribers, you're comparing and kind of compare them to different kind of media companies. Each service has different tiers, they have different pricing, and they might offer different deals. Like some of them have like lots of free trials. Some of them might be frequently bundled with, you know, like an internet service or something where you buy a new phone and you get 12 months free of Disney Plus. And so you're technically a Disney Plus subscriber, but you didn't really pay for it. So it's really hard to kind of come up with any metrics where you can actually compare side by side these streaming services, except for maybe watch time. I think is probably the one place you could kind of compare. But nevertheless, it is always interesting to, at least to me, when we get extra details from from these companies.
Yeah, nice. Is that it? Is that all we've got?
Yeah. Talk us through Ubisoft.
Yeah, nice.
What's going on with Ubisoft? I haven't heard anything about them in a very, very long time.
Yeah, well, so you wouldn't have heard much about them if you're a good video game enthusiast, because they haven't made a good video game in a while. Yeah, Ubisoft are just they're the classic. I don't know. There's a term in the industry called Ubisoft bloat, where they basically make the structure of a game, and then they just fill it with bloat. But they don't make it a good game. They just want to make it a big game. They just pump it full of just useless crap that it's just like grinding. People just have to grind their games to get anywhere.
Yeah, I feel like I've definitely played some Ubisoft games, but I can't remember off the top of my head like what are some big Ubisoft games?
Like Far Cry is probably their biggest. Far Cry and Assassin's Creed are their biggest franchises.
They're great games, or at least they used to be. I don't know if they are anymore. I remember the early Far Cry games were really good. And
the early Far Cry games I loved. That was so good.
Yeah. And Assassin's Creed as well.
And yeah, they had a sweet spot. Assassin's Creed definitely, like Black Flag and like those earlier ones, that had a sweet spot where they were just putting out really solid games. I had a list. Where's my list here? They've also got Just Dance, Prince of Persia, Tom Clancy's franchise, Watch Dogs, The Crew, Trackmania, Trials, and Rayman.
Oh, yeah.
They also made the recent Star Wars Outlaws game, but that one too, like, that's a big franchise dealing with Star Wars, but didn't do very well because it was just that classic make a skeleton of a game and then just fill it with Ubisoft bloat. Just fill it with chores. That's essentially what they do. They make the structure of a game and then they just fill the game with chores. So yeah, they've copped some criticism. But that's not what this story is about, Hamish. This story is about them now saying, you know what, we're probably not great at making games anymore, so let's just sell out. So French video game publisher Ubisoft said Thursday it's appointing advisors to review and pursue strategic options after a report last year suggested that its majority backers were considering a buyout. Ubisoft said in a strategic update that, quote, leading advisors had been hired to explore the, quote, transformational, strategic and capitalistic options to extract the best value for stakeholders. That's just if you want to play a great video game, that is just the phrase that you want to hear. You know, you want them to come out at the Xbox convention, or you want them to come out and say, "Yeah, we're trying to get the best value for our stakeholders." So you can expect there to be microtransactions, and base game's going to be crap, and you're going to have to pay a lot for it. But yeah, anyway, can you tell I'm a little bit salty? just a tad.
Yeah.
Says here, this process will be overseen by the independent members of the board of directors. Ubisoft will inform the market in accordance with applicable regulations if and once a transaction materializes. In October, Bloomberg News reported that the Guillemot family, who founded Ubisoft nearly 4 decades ago, and Chinese tech giant Tencent were considering a potential takeover of the firm. Shares of Ubisoft skyrocketed more than 30% on the report at the time. It says here, quote, "We are convinced that there are several potential paths to generate value from Ubisoft's assets and franchises." Yves, how do you say that name? It's something French. Yves Guillemot, co-founder and CEO, said Thursday, addressing the firm's strategic plan. The Bloomberg report followed a decision by Ubisoft to delay the release of its latest title in its popular Assassin's Creed video game series, Assassin's Creed Shadows, by 3 months to February 2025. On Thursday, Ubisoft postponed the launch of Assassin's Creed Shadows again, pushing it back to March 20. Shares of Ubisoft have declined 45% in the last 12 months, amid woes surrounding its pipeline of blockbuster launch titles, as well as doubts over the company's strategic direction. This, to me, sounds like a classic case of a group of people that love video games getting together and making video games. And that's great. And then they find success making video games, and then more people come into the company that are business people that can manage the business, and then all of a sudden the company doesn't know how to make good video games anymore. They just know how to run a business.
Yeah.
And overall, and that's kind of, you can see it in their games. Like, their games used to be great and everyone used to play them. And now these big AAA titles come out from Ubisoft and everyone just is underwhelmed. And, you know, they don't do as well anymore. They just don't. But they're stuck in this corporate, we need to, you know, get this title out by Q3 2025, and we need to make X amount of dollars of sales and marketing and blah, blah, blah. It's just like, make a good game. Yeah. It's not that hard. Make a good game.
And I think it seems like the video game industry kind of went through and is going through the same thing that the movie industry went through, which was when interest rates was 0%, there was just so much money just being thrown at every kind of project. And so you had a lot of really great games come out. Maybe they weren't very profitable, but you had a lot of stuff coming out. And now companies, especially bigger companies, with these big corporate structures, they're looking at interest rates and they're looking at return on investment, and they're being a lot more. They're trying to be a lot more efficient, which is not the greatest thing when you're making a game or a piece of art or a movie, whatever it is. Generally, the best kind of games and movies don't kind of come through efficient allocation of funds.
Yeah, exactly.
And so
you've got to let them cook.
Yeah, exactly.
Anyway, dude, that is all I had on Ubisoft, and that is all we've got, right?
Yeah, that's all we've got. Yeah, thanks everyone for tuning in. Back here, 2025, first episode of 2025, and we'll be looking to try and do it every single week. I wonder how many weeks do you reckon we missed last year? We didn't miss too many. We maybe missed a couple.
Yeah, not too many. Only a couple, I would say.
Yeah. We'll
it was mainly because you were sick.
That is true. Yeah, that does happen quite frequently. So, yeah, I'm probably jinxing it right now. So we'll see you next week, guys. We come back in like 3 months.
Yeah, come back in. We'll be just like holidaying somewhere. Oh no, Hamish was just sick.
Yeah,
that's our excuse.
Yeah.
All right, let's bounce out of here. Thanks very much, guys, for tuning in, and we'll talk to you guys next week.
See you guys.